Previously, we did a video on Bollinger Band's momentum strategy. The previous video only have long and short positions. In this video, we shall show another Bollinger Band with a neutral position after exiting the long and short positions. To recap, Bollinger Bands are envelopes plotted at the standard deviation level above and below a simple moving average of the price. Because the distance of the bands is based on the standard deviation, they adjust to the volatility swings in the underlying price. Bollinger Bands therefore use two parameters, the moving average period and the standard deviation. When the bands tighten during a period of low volatility, it raises the likelihood of a sharp price move in either direction, and this may signal a trending move. When the bands separate by an unusual large amount, volatility increases and any existing trend may be ending. Prices also have a tendency to bounce within the band's envelope, touching one band, then moving to another band. You can use these swings to help identify potential profit targets. For example, if the price bounces off the lower band and then crosses above the moving average, the upper band then becomes the profit target. Let's now go through the Python code to implement this Bollinger Band with exit. First, we will import all the necessary packages. As usual, we'll use the Microsoft dataset as an illustration. So here are the two parameters used by Bollinger Band, the moving average window period and the standard deviation. So first we compute the moving average by taking the rolling windows and the mean, and the rolling standard deviation by taking the rolling windows and the standard deviation. Next, we'll compute the Bollinger upper and lower bands by taking the moving average plus the standard deviation multiplied with the rolling standard deviation, and the lower band is the moving average minus the standard deviation multiplied with the rolling standard deviation. So unlike the previous video, now we're going to implement an exit for the long and short positions. First, we define our long position when the closing price is less than the lower band, but we exit from the long position as long as the closing price go beyond the moving average. So we will take a long position to be 1 when we enter the long position, and when we exit we take the long position to be 0. Similarly, we can do it for the short positions. So we take a short entry when the closing price is greater than the upper band, but we exit from the short position when the closing price fall below the moving average. And then we can take the long positions to be short position to be -1 and exit to be 0. So we will do a few NA to fill out all the NA data, and then we have a final position to combine the long position and the short positions. So over here you can see that we have 2000 over long position, 4000 short position, and 1000 that we exit from both positions. So next, we will compute the returns, and this time we're going to take the log return. If you remember previously, we used a simple return, right? So, and then the strategy returns will be the returns multiply with the positions of the previous positions. We can take a look at the strategy returns histogram. As you can see, the returns are mostly 0, and we can compute the Sharpe ratio manually by taking the strategy returns mean divided by the strategy returns standard deviation. That gives us the daily Sharpe ratio. And we want to get the Sharpe ratio, we just take the square root of 252, multiply with the daily Sharpe ratio, and this gives us minus 0.054. We can also get the Sharpe ratio using this Polio library. We just use create underscore simple underscore tear underscore sheet and put in our strategy returns. Again, we get the Sharpe ratio of minus 0.05. So the plus point of using this package is that we got a lot of others metrics. For example, we can see the maximum drawn down for this strategy is minus 97%, and this is the cumulative strategy returns plot. And this is the rolling Sharpe ratio, is hovering around 0, and this is the drawn down plot. So you can see that most of the time we almost like 97% drawn down. Okay, this concludes the video for this Bollinger Band with the exit strategy. If you liked the video, please share and subscribe to our channel. The Python code can be downloaded below. Thank you very much.